The Federal Reserve controls every dollar in your wallet, sets the interest rate on your mortgage, and can legally create money from nothing. It is not a government agency, it has never been fully audited, and it was created in secret by the people who profit from it. This is the story they don't teach in economics class.
November 1910, 7 men boarded a private train in New Jersey using fake names to avoid being recognized. They traveled to Jekyll Island, a private resort in Georgia owned by J.P. Morgan. Between them, they represented roughly 1/4 of the entire world's wealth. Senator Nelson Aldrich, Frank Vanderlip of National City Bank, Henry Davison of J.P. Morgan, Paul Warburg of Kuhn, Loeb and Company, and representatives of the Rothschild banking dynasty. Their mission, design a central banking system for the United States. Their cover story, a duck hunting trip.
The plan they wrote at Jekyll Island became, almost word for word, the Federal Reserve Act of 1913. It was passed on December 23rd, 2 days before Christmas, while most of Congress had already gone home. President Woodrow Wilson signed it into law that night. 3 years later, he reportedly said, "I am a most unhappy man. I have unwittingly ruined my country." A great industrial nation is controlled by its system of credit. Our system of credit is concentrated. The growth of the nation, therefore, and all our activities are in the hands of a few men. That quote is disputed by historians. The Federal Reserve Act is not.
Here's what the Federal Reserve actually is. It is not a government department. The Federal Reserve is a network of 12 private regional banks owned by member banks, which are private commercial banks. Its board of governors is appointed by the president, but the actual monetary policy decisions are made by a committee that includes representatives of the private regional banks. The Fed can create money, set interest rates, and conduct open market operations with essentially no direct democratic oversight. When Congress tried to audit the Fed in 2010, the bill was killed in committee.
Let's talk about what happened once it had the power to print money. In 1913, $1 had the purchasing power it had always had. By 2024, that same dollar is worth less than 4 cents in 1913 terms. 96% of its value gone. Not lost to bad luck, lost to inflation, the quiet tax that no one votes for. And the 1929 crash. The Federal Reserve had been expanding the money supply throughout the 1920s. Then, in 1929, it contracted it sharply. Some economists argue this wasn't negligence. Congressman Louis McFadden, who chaired the House Banking Committee, called it deliberate. He was assassinated in 1936 after 3 attempts on his life. August 15, 1971. Richard Nixon appeared on national television to announce that the United States was suspending the convertibility of the dollar to gold. The Bretton Woods system, where every dollar was backed by actual gold, was over. From that point, the dollar was backed by nothing except the promise of the U.S. government, and the agreement they made with Saudi Arabia to price all oil in dollars. The petrodollar system meant that every country on earth needed to hold dollars to buy energy, which meant the U.S. could print money, and the rest of the world paid for it.
2008. The largest banks in America had been packaging worthless mortgage loans into financial products rated as AAA safe by agencies they were paying to rate them. When it collapsed, the Federal Reserve and the U.S. Treasury didn't let them fail. They gave them $700 billion. Then, quietly, the Fed provided an additional $16 trillion in emergency loans to financial institutions around the world, a number revealed only through a partial audit forced by Congress in 2011. No bank executive went to prison. Millions of Americans lost their homes.
Between 2020 and 2022, the Federal Reserve created approximately $9 trillion in new money through a process called quantitative easing. This is not a conspiracy theory, it's in their own reports. The result, the highest inflation in 40 years. The people who benefited, those who owned assets, stocks, real estate, which increased in value. The people who paid for it, everyone who held savings in cash or worked for a wage that didn't keep pace. The Federal Reserve didn't do this by accident. It did this because it can, and no one can stop it.
And now they're building the next system. The central bank digital currency, CBDC, is a digital dollar that would be issued directly by the Federal Reserve. No banks in the middle, no physical cash, every transaction recorded. Spending could be restricted by category, no more than this amount on food, this much on fuel. Accounts could be frozen or deleted at any time. This isn't speculation. These are features described in Federal Reserve research papers. The Bank for International Settlements, the central bank of central banks, calls it the future of money.
Look at the back of a dollar bill. The pyramid, the eye, Novus Ordo Seclorum, New Order of the Ages. Whether you read that as symbolism or warning, the practical reality is the same. A small group of private institutions accountable to no electorate controls the supply of money for the most powerful economy on earth. They were never voted in, they cannot be voted out. and the system they built in secret in 1913 is still running largely unchanged today. If you want to understand power, follow the money and ask who prints it. Subscribe if you want to keep pulling the thread